Look at this. 72 even, 105, 104, 140, I mean. That's an auction there. Then we have big selling, or the other half of the auction at 72.75, but mainly 72 even is where the big auction is. 71.75 is a shelling point because it's the thin part of a profile, even though my tape is dirty and it's covered in prints. See how capital has already been committed, inventory is quote unquote neutralized. If I was paying attention, I could have traded this. We sit here, 71. First of all, the queue becomes sell sided, 71 trades and only a 38 trades. But that's you know I don't know if you're going to notice that when you're actively trading. 52 trades. So the queue follows up here. There's a lot of committed capital here, meaning it's just traders who are in or out of the market, meaning the market moves through things more effectively because there are less speculators to mess with the price action. That's not the correct word, but boom, right there, and the uptick. The reason the 28 and the 11 lot are so important is because of how fast they came down, not because of their size. It's either a breakout trader or somebody getting out. I don't have access to the tape. And so what I'm looking for is price to revert. That's it. That's the entry, and then the auction continues. Now what I'm looking for is, of course, price to revert. I want price to sit above 71.50. I want it to be at 71.75 or 72 even, and I want the Q to pull, or I hope I clear the bid ask here. I want it to accommodate a medium amount of orders, not a lot. I don't want like 100 lots thrown in. And if it's light, I suppose it works in my favor too. But I want the queue to pull a little bit based on like 10, 20 lots hitting. Uh, it's going to be empty. The queue's going to be the market's going to be empty because everybody's already committed. And that immediate plunge is whoever was left most likely getting flushed out. There's a 20. We move up on 4. The bid ask sits on 4, 13, 1, 19, 20, 6, 30. Now we ignited, we kicked off on 45. So the tail end of the move is going to be, uh, you can say, communicated or signaled by buyers, most likely pressing up. There will be more 45 lot tier size and price won't move up anymore. Or sellers can dry up, or I mean buyers can dry up, or sellers can step in. Right there, a seller stepped in 47, 73, 25, and price moved lower. 38 now. But if you get in at 72.25 and you're holding this, you could say the move is still going, but realistically, tape has slowed down. We have the ignition from buyers here, sellers not participating in the queue pulling from that illiquidity I was talking about previously, and now we are forming an auction. So this is two separate moves. Here's the ignition of it, and here's the end, and the tape is slowing down. You need another quote unquote rotation. You have to watch order flow again and discern if there's an edge in order if you want to continue the trade. And it's not as easy to discern an edge from an equal auction from an equal auction because there simply isn't much to trade off of, and that itself is a trade. Is not trading when there's a quote unquote equal auction. All, what I mean by that is see how order. What I mean by that is effectively the if you leave this trade on, first of all, regarding the amount of ticks you're in profit, if you leave the trade on into order flow normalizing, which is what this is right now, it's a 30 and a 31. You have to you have to recalculate and reassess your trade and reassess the order flow and effectively put on another trade the longer you keep the trade on because the signal has decayed. It died off. There was the signal was here. There was the resulting move, and order flow is normalized up here. So, and when order flow normalizes, your trade's over. Your trade's over. It's done because there's no more edge anymore. Even though your trade is open, if you don't tether your trade to a signal, or if you don't technically an exiting a trade is a trade in itself because you're making the risk taking decision to take yourself out of the market. If you ignore that order flow normalizes and the edge which you initially got in for was a discrepancy in order flow and it disappears up here. If you ignore that, it goes from a trade with an edge to a coin toss. You're gambling now. So if it changes, uh, then we can talk about it. If flow changes, so they weigh a 674 on the ask. I'm just holding a reversal bias here because we're so high. 61. We double that 36 at 74.25 on the bid side. So buyers are still heavy now. And also notice how tape slowed after that initial pull. Tape slowed down. Order flow normalized. And market makers begin to provide liquidity again. You don't want that, and so the longer your trade is open as well, you the longer your trade is open as well, the more added risk you're taking. Risk just compounds the longer your trade is open. Now I cleared the ask. They're ready to move lower. See how they move lower on 6 and 5 before the 21 trade 74.25. 57 is absorbed at 74.50. The question is, I would be wary though of movement because there's a 133 on the ask at 75 even. But we saw 30 lots trade on the sell side, 2 ticks lower, or one I forgot, and then 60 trade on the bid. So there's an order flow imbalance to trade against now. I said I'd be wary. A second later, the queue jumped on heavy buying in this liquid zone, and 181 trades. That order in the queue, the market was seeking liquidity, and they found it. I'm wondering if they went up to probe it a tick away. 57, 59, 32, somebody stacks it. Yeah, okay. Now the question is, um, I know those order flow dynamics don't apply to resting orders. I almost know they do. So I have to make another video, I think.